So, received in India we will consider, bought to India, deposited in India we will not consider. So, income taxable on the basis of residential status. Now, anything which is received in India, anything which is earned in India, irrespective of further information, whatever deposited we will not consider. We have to see whether it is earned in India or received in India. Any gift received from relative exempted. Any gift received from outsiders up to 50,000 exempted. Hello everyone, I am your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So we are in the session 6 of your topic called Tax Management 1. In the previous session, we discussed about your residential status as well as the incidence of tax. Under incidence of tax, we learned the format. Along with format, we did two basic problems. Now, whatever we are doing today, three problems we are doing, all three problems are your previous year question papers. So, these kind of questions only you can expect in your final examination. So, concentrate. The same format we are going to cover in your exam also. So, what will be your agenda for the day? So, it is simple. The first thing, incidence of tax. The topic we are covering today is called incidence of tax. Below that, the one more topic will be problems. What we are doing today, it is a completely problems. Now, so in the first session, we did two problems for your incidence of tax, and this is a second session of your incidence of tax. Now, we are in problem number 3. In this, Sri Hanuman Prasad has the following income for the previous year ending 31st March 2020. Now, income from salary in India from company. As I told you, income from salary in India. Anything which is in India, anything which is received in India, anything which is earned in India, irrespective of further information, taxable, taxable, taxable. As per this, income from salary in India from company. So, taxable, taxable and taxable. All the three cases we consider as taxable. Then, dividend from an Indian company received in England. Now, dividend from Indian company. Any dividend from Indian company, taxable or exempt? Yes, it is exempted. So, we will not consider. Consider for all three. We will not consider for all three. Next, income from house property in India received in Pakistan. Income from house property in India. Again, so where you generated rent, India. Where you earned, India. But received in Pakistan. So further information not required. Once you got to know income from house property in India. So this is sufficient. So it will be taxable, taxable as well as taxable. Next, dividend from foreign company. If it is Indian company, exempt for all three. It is a foreign company, so taxable for only one person. Now, foreign company received in England and deposited in bank there. So, for only one person, it is taxable. Next, income from business in Kolkata. See, business where? In India. Where is your business? In India. Further information not required. Why? Because whatever income earned, it is in India. It may be received in USA, but earned in Kolkata, earned in India. So very simple. Taxable, taxable as well as taxable. Next, Income from business in USA, controlled from Kanpur, as I told you, received outside, earned outside, but controlled where? India. Then how many persons are taxable? Two persons are taxable. First person, second person, and the third person, non-resident, is not taxable. Next, income was earned in Australia and received there, earned also there, received also there, but bought to India. Bought to India is immaterial. Bought to India is not important. Bought to India we have to ignore. But income was earned in Australia, received there, received also there, earned also there. Only one person is to be taxable. Now, taxable, non-taxable, and non-taxable. Next, income was earned over his maternal uncle sent a bank draft. Maternal uncle means what? Relative. France as a gift to him on his marriage. Now, on his marriage, his maternal uncle has given some gift. So, as I told you, what is the logic or what is the rule for gift? Any gift received from relative, exempted. Any gift received from outsiders, up to 50,000, exempted. Any gift received on occasion of marriage, exempted. Now, it is received from whom? Maternal uncle, means relative, exempted. One more is there. So, gift, how much is the amount? 20,000. Less than 50,000, exempted. Then, it is given when? On occasion of marriage. Marriage also exempted. So, whatever gift collected, it is exempted. Hope you are clear. I go out of the screen. If you want, you can take screenshot. So what you are supposed to prepare as per this, compute the gross total income if he is not ordinary resident as well as non-resident. Now, income taxable on the basis of residential status. Now, so whatever we discussed already, the same thing we are going to cover now. This is the right format to attend in your examination. In your examination, the format should be like this. Now, as per this, income from salary in India. Income from salary in India. So, taxable, taxable as well as taxable. Next, dividend from Indian company. As I told you, any dividend received in India is exempt, exempt and exempt. Next, income from house property in India. In India means taxable, taxable as well as taxable. Next, dividend from foreign company received in England. One person is taxable. Next, income from business in Kolkata. So, where the business is? Kolkata. Taxable, taxable, taxable. What we discussed in the question, same thing we are following. Then, income from business in USA, controlled. If you find a word called control, two persons are taxable. 12,000 and 12,000. Last person is not taxable. Next, income earned in Australia. So what will happen? Only one person. Next, gift from maternal uncle, not taxable. So why? Because any gift from relative is what? Non-taxable. It is exempted. So nil, nil as well as nil. So once you done with all the entries, you have to total. So if you total this, 50 plus 20, 70,000, plus 10, 80,000, plus 20, 1 lakh, plus 12, 1,12,000, plus 25, the total is 1,37,000. We'll come to second column, 50,000 plus 20, 70, plus 20, 90,000, plus 12, 1,02,000. So your total is 1,02,000. And your last column is 50,000 plus 20, 70,000, plus 20, 90,000. Your total is 90,000. Clear? Yes, this is your complete 10 marks problem. So this is a second problem for the day. As per the normal thing, this is a fourth problem. We already did two problems in the previous session and third one just we completed. This is a fourth one. Following are the incomes of Sri Amarnath for the financial year 2019 and 2020. Now, as per this particular as well as rupees are amount in rupees. Now, so this is a question they have given in this. Interest on saving bank deposit, Allahabad, Delhi. Delhi is where? In India. Anything which is in India is what? Taxable, taxable, taxable. So the first one is taxable, taxable and taxable. Second one, income from agriculture in Africa invested in Nepal. Now, how much it is there? 10,000. Whether it is in India or outside? Outside. Then how many persons are taxable? Taxable, non-taxable as well as non-taxable. Then, dividend received in UK from an American company. If dividend received from Indian company, then it will be exempted, but dividend received from American company, so it will be taxable, non-taxable as well as non-taxable. Next, out of which 2000 was remitted to India. This is immaterial. Anything which is bought to India, anything which is remitted to India, we will not consider. Then income from salary for 3 months for working in India, Indian Embassy Office. So where it was worked? Indian Embassy Office. So it must be what? Taxable, taxable, taxable. Next, income from house property. The building is situated in Pakistan. Now, out of which 10,000 deposited in the bank in Pakistan. So whatever deposited we will not consider. We have to see whether it is earned in India or received in India. So as per this, income from house property, the building is situated in Pakistan, out of which 10,000 deposited in bank in Pakistan. Now, as per this, so everything is done in Pakistan only, so only one person is taxable. Taxable, non-taxable, non-taxable. Next, pension income in Belgium, so it is not in India, for service rendered in India with a limited company. Where the service is rendered? In India. Service rendered in India. So what will happen? If service rendered in India, income earned where? India. Even though it is received in Belgium, but earned in India. So it will be what? Taxable, taxable as well as taxable. So this will be your solution or hint for your question. So if you want, you can take a screenshot. We'll move for the answer. Now, so what you are supposed to prepare in this, as per this, compute the gross total income if he is a resident, not ordinarily resident, as well as non-resident. Now, income taxable on the basis of residential status. Now, so interest on saving bank deposit, as I told you, taxable, 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 taxable. Income from agriculture in Africa, 1% is taxable. Next, dividend received in UK, so 1% is taxable. Income from salary for working in Indian Embassy means all three taxable. Next, income from house property in Pakistan, as I told you, 1% is taxable. Pension income, even though it is received in Belgium, but service rendered where? In India. So what will happen? All the three persons are taxable. Now, what is the total? So 10 plus 10, 20,000, 21, 200. So 93, 200 And if you add these two, you will get 1,28,200. Similarly, 72 plus 20, 92,000 plus 1,200, 93,200. Next, this will be 93,200. This will be 93,200. So this is all about this problem. I'll go out of the screen. Please take screenshot. Now, we are in the last problem of the session. Now, the problem is easy. So, try to solve yourself. Now, profit earned from business in Paris, which is controlled from India. Anything which is controlled from India, what? 2% are taxable. Along with this, half of the profit being received in India. So for the third person, we have to take half. Remember, first 2 persons full and the last person half. Then income from pension from former employer in India received in USA. In India means what? Taxable, taxable, taxable. Income from agriculture in Pakistan brought to India. So income from agriculture in Pakistan brought to India we will not consider. So received in India we will consider. Brought to India, deposited in India we will not consider. So income from agriculture in Pakistan and brought to India. Now this will be what? This will be taxable only for one person. Next, income from property in UK and received there. Property in UK, received also UK. So only one person is taxable. Next, past untaxed income. If you find a word called past untaxed foreign income, so it will be what? Exempted, exempted as well as exempted. Next, gift in foreign currency from relative. From relative means exempted, exempted as well as exempted. All three cases it is exempted. Determine the gross total income of Mr. Darshan. Simple one. Easily you can score 10 marks. Now, business income from Paris, controlled, taxable, taxable. Half received in India. So only 80,000 is taxable in the last person. If half is not received in India, last person will be 0. Why? Why means if it is controlled in India, only 2 persons are taxable. Remember this. Next, income from pension for service in India. So taxable, taxable, taxable. Next, agriculture income in Pakistan, not land not situated in India. So income also in Pakistan, land also in Pakistan, received and earned in Pakistan. Only one person is taxable. Next, income from property in UK, received in India. So received in India, not accrued in India. It is neither received in India nor accrued. Means it was not even received, not even accrued. So only one person is taxable. The last one, past untaxed income. What will happen? Exempt, exempt, exempt. All three. And one more thing is gift. Gift is always non-taxable. If it is from outsiders, up to 50,000 exempt. If it is 51,000, 1,000 is taxable or 50,000 taxable. Remember, if it is 50,000 1 rupee, then it will become 50,000 1 rupee is taxable. Not only 1 rupee, complete whole amount will be considered as taxable. Now, add everything. 160 plus 40, 2 lakh, 2 lakh plus 32 and 32, 2 lakh 64, 1 lakh 92, 1 lakh 12,000. So these are the informations available as per your question. So how much we got? 264, 192 as well as 1 lakh 12,000. I'll show this your final question with solution. You can take screenshot. So this will be first part of your question. The second part of your question. There is a solution for this particular problem. So this is all about your today's session. In the next session, we will conclude or complete your topic called incidence of tax. Another 2 or 3 problems we will solve and we'll wind up with this particular topic. Thank you.